How big could an XRP spot ETF be on day one? According to TradingView news citing Crypto, Elon Musk's Grok AI projects a debut phase inflow anywhere between $150 million and $20 billion for a US spot XRP ETF. The range is huge, and that's the point. Demand could start modest or, if everything aligns, arrive in a wave. Let's unpack what debut phase inflows really means. It's the money that enters the ETF complex as the first funds list and authorized participants begin creating shares. The upper end of Grok's range assumes multiple issuers go live around the same time. Spreads are tight, and institutions that won't self-custody XRP finally have a clean wrapper to buy. The lower end reflects a slower start if only one fund lists or if market makers and platforms take time to spin up. So what would have to be true to land near the high end of that range? First, a true rules-based approval lane, so CBO, NASDAQ, or NYSE Arca can list multiple XRP spot funds quickly. Second, strong market making from day one tight spreads and deep order books give larger allocators confidence. Third, ready distribution. Brokerage platforms, RIAs, and private banks need the tickers available in client menus. When those three line up, inflows don't trickle, they schedule. Here's how to tell if launch demand is real or just headline heat. Watch assets under management and turnover after day one. Healthy products add ohm steadily and keep volume above the initial pop. Track the premium or discount versus indicative value. Tight tracking means the arbitrage loop is working and more creation units are flowing. And watch underlying spot liquidity in XRP pairs. Strong ETF demand usually shows up as deeper books and cleaner fills on the token itself. What could pull flows toward the low end? If the first issuer goes live alone, if surveillance sharing or custody language slows peers, or if macro is risk-off, allocators tend to wait for better conditions. Also, crypto ETFs that mix cash and derivatives for liquidity management can attract cautious money at first. Some institutions still need internal sign-offs before they size positions. Price talk matters, but flows drive staying power. If ETFs unlock a new class of buyers who allocate on schedules rather than chase candles, breakouts stick longer. If flows underwhelm, price can still rally on headlines, but those moves fade faster without a bid underneath. A simple action plan to narrate over your chart on launch week. Step 1. Note the tickers and watch ohm and volume daily. Step 2. Look for acceptance above obvious round numbers and whether pullbacks hold strong closes plus held retests signal real participation. Step 3. Check tracking. If premiums stay near zero and spreads stay tight, the plumbing is humming. Ground rules and risks. Grok's projection is an AI-generated estimate shared publicly. It isn't guidance from an issuer or a regulator. ETF approvals and timelines can shift, marketing can overpromise, and sell the news reactions happen if positioning is crowded. Treat bold numbers as scenarios, not certainties, and size accordingly. Bottom line, according to TradingView news via Crypto, Grok's model says a US spot XRP ETF could see anywhere from $150 million to $20 billion in early inflows. If multiple issuers launch together, distribution is ready, and market makers keep spreads tight, the upper band becomes plausible. If rollouts stagger or macro turns, expect a slower climb. Watch ohm, volume, tracking, and spot depth. That's how you'll know which path we're on. You've been watching Cryptozard news. Please subscribe and like, and leave a comment if you enjoyed this video, and let me know what other crypto-related news you'd like to hear in the future.